Asian Paints, India's largest paint manufacturer, fell by nearly 20% from its recent highs since Russia invaded Ukraine. This case study is a perfect example of how you can make lots of money in the stock market without taking crazy amounts of risk. So, in this video, I'll be sharing why this might have happened and how I helped my dad take advantage of the dip. So if you're new to this channel, my name is Kunal, and I study the strategies and behaviors of world-class investors, and I love to share what I'm discovering. So stay till the end of the video, because if you want to learn the strategy, you don't want to take bits and pieces and then risk your money in the market. Also, I have a checklist that I'll be sharing close to the end of the video. The other thing I want to say right at the start is this is not financial advice. I am simply sharing what I am learning and discovering. So take this as one data point in your own investing journey, and I hope you find this to be useful. So let's get started by looking at the charts here. So if you look at the Asian Paints chart for the last one year, you can see that since June 2021, that's about nearly a year ago, it has a strong support level close to 3,000 rupees. So it has gone over that support level, 3,400. It has come back to 2,900, but generally, if you draw a line, the support level is at 3,000. And so what you notice here is that right around when Russia invaded Ukraine, that's on February 24th, the stock market crashed all over the world. All indexes, whether that's the Sensex or Nifty, and even in the US, these indexes crashed, and you see that there's a strong dip here, right? So right from 3,100, it went all the way down to 2,700. If you look at its recent high, that's 3,500. That's a drop of over 20% at 2,700 levels. So what might be going on here? Really, even if you look at the 1 month chart, again, February 24th was when Russia invaded Ukraine, and you see that beginning March 1st, this thing goes down and down and down, but then comes back up to its support levels of 3,000 rupees. So really, the main reason the share price dropped was crude oil, right? Crude oil prices are going up, and let's take a look at this article. The share price of Asian Paints dropped over 6% on Friday on worries that the paint market maker's operational performance may take a hit due to the surge in crude oil prices. Shares of Asian Paints were down 4.9% at rupees 2,729 on the Bombay Stock Exchange. The stock has been losing for the last 3 days and has fallen 15% during this period. Let's look at another article here. This is from the Economic Times, and Asian Paints gets a crude shock, slips 12% in a week. It's rather rare for Asian Paints to lose color, but this past week, one such rare spell for this all-weather performer. So what you need to understand is that Asian Paints uses crude oil for its input material. So naturally, when the prices of crude oil go up, the cost of manufacturing paint goes up. So therefore, it takes a hit on their operational margins. So this is the main reason that the stock fell. But this is a dominant company, right? So let's take a look at what some of the analysts are saying. So if we go down the same article, you can see even after the recent decline, analysts said that stock valuations are still not cheap. The stock has rallied 171% in the past 5 years, compared with an 83% jump on the Nifty index. However, most analysts suggest that the correction be taken as an opportunity for the long-term investor. So if you're looking to to hold on to this stock for the long term, this dip may be a perfect opportunity for you to get into this stock. An analyst at JP Morgan believes the company is a good long-term holding, benefiting from the attractive growth outlook for the core decorative portfolio, good execution, and potential mid to long-term upside from new growth in the home decor space. So while the stock price has gone down to 2,700 levels, the key thing to understand about Asian Paints is that it's a market leader in the Indian paints market industry, right? It's an industry leader. It's the number one supplier of paints to a growing, developing, emerging market economy, and so this business really is not going to be threatened by the war in Russia. So temporarily, yes, it has an impact on its price, but over the long term, Asian Paints will be able to pass on its high input cost to the customer. So what really is Asian Paints' competitive advantage? So Asian Paints has a strong supply chain management system. This is something that every other paint maker in India covets. The reason is that Asian Paints is able to deliver 3 to 4 times a day to their paint dealers across 600 countries. And so they're able to turn their inventory over literally 3 to 4 times a day, and they're able to do this because of their proprietary technology, right? Think of Asian Paints as a big data company. It sells paint, but its competitive advantage actually comes from its proprietary data and its ability to forecast demand. The other thing that Asian Paints has going for it is that it's a clear market leader. So some of you might know this story, but back in 2010, Sherwin-Williams, which is the largest paint manufacturer in the world, decided to close up shop in India. They put in hundreds and millions of dollars of money to try to capture some of the market share in India. They just couldn't succeed, and so they closed shop and left. So this just tells you how dominant Asian Paints is. So as I was thinking about this stock, right, I was making this recommendation to my dad again because I live outside of India, and I do love studying the Indian markets, and I help my dad in the process of sharing my knowledge and advice to him. But he's my dad, so remember, this is not financial advice or buy and sell recommendation for yourself. But let's take a look at the checklist that I went through for myself as I thought about making an investment in Asian Paints. So this was my checklist. Has Asian Paints built market leadership? And the answer is a resounding yes. It's the number one paint maker in India. Does it have very high barriers to entry? Again, no problems there. I just mentioned their proprietary data and their supply chain efficiency. No one even comes close to them. Is it a company where its dominance is translating into free cash flows? So take a look at their financial statements. They are a free cash flow generating company year after year. So no problem there again. Then is the business priced at a discount because of recent events that are scary? And this is exactly what's going on, right? So one of the main reasons the share price fell is because of scary news that's coming as a result of the geopolitical tensions between Ukraine and Russia. And then, would I be willing to invest a large part of my net worth into this business? Absolutely. So the key thing is, in this checklist, you'll notice is that while I am buying into this dip, and while I'm suggesting my dad to buy into this dip, I'm only suggesting because I am very comfortable holding this stock for the next 10 years. I'm very comfortable my dad holding this stock for the next 10 years. I wouldn't do this with a new company that has just been listed in the stock market, right? Because it won't have the dominance to withstand these external pressures that are happening around the world. So with this strategy, it's a heads I win, tails I don't lose that much, right? So if I buy into this dip, I'm likely to make money in the next 6 months to 1 year, and if it keeps going down, that's okay too, because I'm okay and I'm comfortable holding this company for a long period of time. So what happened to the price of Asian Paints within a couple of weeks of it going down to the 2,700 levels? I showed you the chart earlier, but let's hone in into the 1 month chart, right? So you see it fell to around 2,700 levels right here. 2,700, 2,650-ish was the lowest level that it had fallen to. But then that was on March 8th, and you see the high on March 17th. So that's less than 10 days. It's come back up to 3,149. So this is exactly what happened. So my dad got in at 2,700, and within 10 days he made 15% as a result of this dip. So the conclusion here is that this is a heads I win, tails I don't lose that much strategy, right? And you can pretty much follow this strategy, this approach, particularly for blue chip stocks. I'm not saying go and blindly put your money into this into the market, but if you are studying blue chip stocks, and when these kind of opportunities come along, you can ask yourself, is this a crisis proof business? Is this a market leader that people are reacting to temporary bad news in a way that's driving the share price down? And if the answer is right, you can be confident that the price will come back up in due course of time. But as always, money and risk in the stock market is as a result of not knowing what you're doing. So take my recommendation, my input, as one data point. As always, I encourage my viewers to come up and with your own viewpoints and have a contrarian mind, right? And that's going to help you stay away from herd behavior. So I hope you found this useful. If you did, please hit the like button and subscribe to my channel, and I will see you soon.